It was a short week after the holiday, and I know everybody is talking and thinking about Trump right now, but we're here to talk about the economy. So let's take a look at what happened this week. Before we begin, remember to like this video and subscribe for more economic updates. The data highlight of the week was the release of the April Personal Consumption Expenditures Price Index, known to be the Federal Reserve's preferred inflation gauge. On Friday, the Commerce Department revealed that headline or all items PCE was up 0.3 of a percentage point month over month, right in line with estimates. Year over year, the index rose 2.7% in April, also in line with the consensus estimate. As for monthly core PCE, which excludes volatile food and gas prices, that was up 0.2 of a point, while annual core increased 2.8%. Each of those figures also came in as projected. Unsurprisingly, ongoing uncertainty over the future path of inflation is being reflected in the prospects for lower interest rates. Not long ago, a rate cut in September, followed by 2 more before the end of the year, seemed to be a lock. Now traders say chances the central bank will cut rates as soon as September are right around 50-50. Shifting gears, 2 measures of the housing market out this week confirmed that prospective buyers have their hands full managing the high cost of getting into a house these days. On Tuesday, S&P CoreLogic reported that its U.S. National Home Price Index for March jumped 6.5% year over year to a new record high. It's the 6th time in the past year the index has reached an all-time high. However, analysts say that continually rising prices could be painting a deceiving picture of the market's underlying strength. In their estimate, the reason prices keep surging is chronically low inventory, driven by potential sellers hesitant to give up their existing low-rate mortgages while rates on new mortgages remain at their highest point in 2 decades. On a related note, the National Association of Realtors revealed on Thursday that its pending home sales index tumbled nearly 8% month over month in April to a reading of 72.3 from an upwardly revised 78.3 in March. Analysts say the big drop in pending sales is a consequence of the ongoing perfect storm created by the merging of higher mortgage rates with house prices at record highs. Also this week, the Conference Board reported that its Consumer Confidence Index increased in May for the first time in 4 months, rising from 97.5 in April to a reading of 102. Economists polled by the Wall Street Journal had expected the index to drop again to 96. Despite the increase in the overall index, there were some concerning signs among the component measures. Average 12-month inflation expectations ticked up 0.1 of a point to 5.4%, while consumers' perceived likelihood of a U.S. recession in the next year rose for the second straight month. Finally this week, a glaring sign that years of elevated inflation and interest rates finally may be taking their toll on the economy. On Thursday, the Commerce Department said that its second estimate of GDP growth in the first quarter came in at an anemic 1.3%, down from the previous advanced estimate of 1.6%. Based on the latest figure, GDP growth in the first 3 months of the year fell by 60% quarter over quarter to its lowest level since spring 2022. The consumer spending component of GDP, which makes up about 70% of the overall measure, also was revised downward from the first estimate to a growth rate of 2% from an earlier reading of 2.5%. That's it for now. I know there's a lot to think about and a lot to talk about right now. Try to have a great weekend, and we'll see you back here on Monday. This is Devlyn Steele for Augusta Precious Metals, signing out.